What's up, everybody? We are starting to see a shift in our housing market with inventory increasing and home prices decreasing. But is it enough? We've previously spoken about housing markets in Florida and Texas and how they're experiencing markets very different than the rest of our country. But now the industry experts are all seeing a trend that could predict the next few years of our housing market. So today we'll take a look at an article by Margaret Hendry for Realtor.com titled "The Number of U.S. Homes for Sale is Slowly Returning to Normal, an Incredible Trend, Economists Say," as well as an article by Jason Ma for Fortune titled "Home Prices Could Start Dropping This Summer, Marking the First Domino to Fall on the Way to a Weaker Economy," Strategist says, to see what they're saying. We'll also go over Redfin's latest housing market update, and as usual, I will give my opinion as well. So let's dive right in. In the latest monthly housing report from Realtor.com, the overall number of homes for sale in May marks 7 months of growth, with sellers listing 6.2% more homes on the market compared to last year. The biggest eye catcher for me is the fact that inventory is rising sharply, says Realtor.com senior economist Ralph McLaughlin. There are 35.2% more homes on the market than this time last year, an incredible trend in the direction of normality. And if you look at the number of affordable homes hitting the market, it's even more. The inventory of lower priced homes is rising faster than other segments, says McLaughlin. There are 46.6 more homes on the market in the $200,000 to $350,000 range, something inventory and price-constrained buyers will surely welcome. And while home prices did go up in May, it's not as much as you would think, especially during the busiest home buying season. As is typical in the housing market's warmer months, the national median list price continued to increase seasonally by 0.3% to $442,500 in May, compared with $430,000 in April. Last year's May median list price was $441,000. If you compare today's prices to pre-pandemic, the typical listed home in May grew by a whopping 37.5% compared to May 2019. Realtor.com also cites the median list price per square foot, which rose by 52.7% this May compared to May of 2019. The price per square foot metric is an important one to pay attention to because the change in that metric is a more solid measure of how much more a home is worth over time than looking at changes in median list price, says McLaughlin. So will more inventory finally cause prices to go down? Or will mortgage rate cuts cause competition and bring buyers back in and therefore keep home prices high? Realtor.com reports that in May, all 4 regions of the United States saw active housing stock grow compared to last year, hitting 47.2% in May. The West saw a 34.5% growth in the number of homes for sale, while the Midwest saw a 20.5% increase. The Northwest was far behind the rest of the country, with growth coming in at only 9.4%. The number of homes for sale also increased in all of the 50 biggest U.S. metros compared to last year. The metros with the most growth in homes on the market were Tampa, Florida, up 87.4%, Phoenix, up 80.3%, and Orlando, Florida, up 78%. These markets were booming during the COVID-19 pandemic frenzy, and home buyers couldn't get enough inventory during those years, says McLaughlin. But the growth in inventory now suggests those markets are normalizing as the pendulum swings back in the opposite direction. Only 12 out of the 50 largest metro areas saw higher inventory levels in May compared with typical 2017 to 2019 levels. However, it is important to note that this figure is up from only 7 metros last month. The top metros with housing inventory above pre-pandemic levels are mostly in the South and the West. They include Austin, Texas, up 33.6%, San Antonio, Texas, up 31.8%, and Denver, up 22%. While listing levels this May are much improved compared to the previous 3 years, it's still down 34.2% compared with 2017 to 2019 levels, explains Spanu. Brian Nick, senior investment strategist at Macro Institute, thinks prices will start falling as soon as this summer, as more homes are languishing on the markets without any buyers. In fact, the year-over-year percentage increase in unsold existing homes for sale is the highest since the Great Financial Crisis, he told Bloomberg TV on Thursday. That's going to put downward pressure on prices in the next 3 to 6 months, he predicted. I also think the next 3 to 6 months is going to be really important in predicting home prices, especially because we're in an election year. Even now in our busy season, he says the supply of homes have been met with tepid demand from buyers who are revolting against high home prices. And when the selling season winds down in the summer and heads into the fall, Nick says home prices will start to drop and erode consumer confidence. Once they start seeing housing prices falling, maybe the home next to them going for a little bit less than asking as opposed to what they've been seeing the last couple of years, that will dent their ability to spend and their willingness to spend as well, he warned. The housing market is really the first domino to fall on what we think is going to be a slower growth story down the road. And Nick isn't alone in this sentiment. Compass co-founder and CEO Robert Refkin told CNBC last month that 30% of the inventory in the market had a price drop, more than any time in the last decade, with supply up 16%. It's a different environment. We are now seeing more sellers than buyers, he said. Full disclosure, Compass is my broker. Meanwhile, national numbers show that home prices are still rising in most parts of our country. The most recent S&P CoreLogic Case-Shiller Index showed prices were up 6.5% in March from a year ago, hitting a fresh all-time high. Separate data from Redfin showed they rose 7.3% in April from a year ago. But the Macro Institute's Nick still remains confident that as the number of existing homes for sale continue to increase, it's now up 8 to 10% annually, prices will soon be coming down. That supply-demand imbalance is starting to correct, which could mean you start seeing lower prices as soon as this summer, he said. Not everybody agrees. According to Freddie Mac, the U.S. housing market is short at least 760,000 for-sale housing units and short another 760,000 for rent housing units. That means that the U.S. housing market is at least 1.5 million housing units away from being a balanced market. To bring the vacancy rate, both rental and homeowner, back in line with historical averages, the U.S. would need to add an additional 1.5 million vacant for-sale and for-rent homes, wrote the Freddie Mac Economist. We are definitely experiencing a mixed market depending on where you live. In Redfin's latest housing market update for the 4 weeks ending June 2nd, prices are down 3% in Austin, Texas, which is more than any other metro, as near record high housing costs push buyers away. Nationwide, price drops are at their highest level since November of 2022, suggesting more metros may see more price declines. Home sale prices are declining year over year in 4 major U.S. metros. 3 of them are in Texas. Austin, down 2.9%. San Antonio, down 1.2%. Fort Worth, down 1.2%. And Portland, Oregon, down 0.9%. The last time that home prices fell in 4 or more metros was in January. Nationwide, home prices rose 4.4% from a year ago to an all-time high for the 4 weeks leading up to June 2nd. But there are early indicators that the national price growth could soften soon. 6.4% of U.S. home sellers cut their asking price on average, the highest share since November of 2022. And the typical active listing has been on the market for 46 days, up 2.3% year over year, the biggest increase in 9 months, suggesting home listings are growing stale faster than they were a year ago. Inventory is losing momentum too. New listings posted one of their smallest year-over-year increases, 6.9%, since February, with high mortgage rates discouraging would-be sellers from selling because they don't want to give up their low interest rate to then go buy something with a much higher rate. That being said, 32% of the homes sold above the list price for the 4 weeks ending June 2nd, down from 34% a year earlier, and 43.4% of the homes sold in the first 2 weeks, down from 48% a year earlier. So don't be surprised if you are still experiencing a seller's market. Although, if you look at these trends, this may soon change. Last week, we spoke about a new loan program from UWN that offers first-time buyers 0% down to then go buy a home. I am very concerned about this and how it will affect our housing market, and not in a good way. With a mixed market like we have, and an election year, and multiple wars overseas, I would be very skeptical about buying a house with these still high home prices with 0% down. There's just a good chance you may find yourself underwater like what happened back in 2008. And we do not want that to happen again. So if you did miss last week's video, definitely check that out next. And comment below and tell me what you think, both of today's video and last week's. Thanks for watching. I do appreciate it. Bye!